Good evening, everyone, and welcome to the BAM Podcasts, where we will talk about our unique perspective on the news of today, culture tomorrow, and here we have the B and the Matthews.
Hey.
I'll work on that, and we'll work on the nicknames. But to get started, we're gonna try a new concept, and it's basically quick takes in a way. So we have 5 minutes, and the person who starts would generate a topic, whether if it's the news or any culture changes that we see or whatever. And we give only 2 sentences, if not one, of their thoughts, and we go in a circle. So the person is next would be Matthews, and then B. The last person would generally say their topics, and then would continue forward, and then whoever's the last one would introduce topic. So I'm going to start. Are you guys ready?
Mm-hmm.
You already know.
All right. Let's see. Okay, ready? 5, 4, 3, 2, 1. All right, 5 minutes starts. I'm going to go correspondence dinner.
Oh, gosh.
I am so glad it's back.
Like,
All right, Matthews. hot takes. Go.
I was thoroughly disappointed that it was back.
What?
Unfortunately, I
No,
it's
2
just-
cents.
There you go. That's all I can say.
All right. B.
V.
All I can say is, Trevor Noah, you are my hero.
Oh my god.
A South American hero. Sorry,
South
South African.
African.
All right. Buffett's advice for beating inflation at his Berkshire Hathaway annual meeting for 2022. Be exceptionally good at something. Thoughts?
Oh, what is your thoughts?
Oh, my thought?
Yeah.
That's valid. Very valid, as that has been proven from his success at Berkshire.
Okay. I would say Oracle of Omaha. Like, there's so many subscribers. That's it.
All right.
Matthews.
I think that philosophy has worked well for him. So very specific. I respect it.
Okay, and then you would start the next topic.
Well, the Federal Reserve Board is meeting this week, raising 0.5. Well, expected to raise 0.5% in interest rates.
Thoughts?
Thoughts? What do you guys think?
No. You start.
Oh,
Then
me?
we go around.
Well, I think it's just strap in for a rough period coming up. Is basically what it is, and so it's expected, but still
2 cents. All right.
makes you nervous, yeah.
Watch how the derivative markets react, specifically options, and look at all the prices. That's all. B.
I think it's a wake up call for everybody in the market right now to kind of really understand how things are evaluated. So it's a wake up call for everybody.
Yeah.
And then, okay, and then B, you would say yours next.
Another one?
Yeah.
Oh, sure.
We keep going until 5 minutes.
Dang, that's fast.
That's right.
Yeah, right.
Yeah. That's fast. Hot take: the Minnesota Vikings. They traded all their picks in the business. What are your thoughts?
What?
And then you say your 2 cents, B.
My thoughts is that Minnesota Vikings did not get swindled.
Matthews.
I didn't follow the draft picks, so I really have no take on this one.
The guy with the algorithm and the big head, I believe in him.
He's going with
All
the
right.
Moneyball philosophy. That's what he's
Let's
doing.
go.
Yeah.
Yeah, let's go. All right. So topic. Crypto and the dollar are partners, not rival. And then my take, yeah, I mean it's pegged by the dollar. Like, come on.
I know.
Matthias, go ahead.
This I don't want to use bad language. There might be kids
Do it.
watching this, but
We're
it's,
rated explicit.
Okay, it's a horse shit. That's what it is.
All right, B.
I think that is a invalid statement because
Okay, you're more proper than I am. I really respect that.
All right, B.
Very
Next topic.
invalid.
We got 30 seconds.
All right. NBC News says parts of Lemon articles are plagiarized. What do you think?
Oh, no, you say you're two.
I believe people plagiarize all the time. It's never cited, never sourced. So
I would say a lot of the big media, they all source from local news. So it's new. Matthias.
Well, there is an opinion in the Bloomberg that says this is the wrong way. Oh, hold on. I'm setting it up for you guys. Well,
Damn. All right, time's up. All right.
okay.
Go ahead, Matthias. Finish your thoughts. Sorry.
Okay. I was just saying that there's a bill in Congress set up to reduce the amount of investment that will be going to China or other competitor countries, especially into the critical infrastructure that was exposed during COVID. It's being reconciled right now. And there are some that worry that would be the wrong way to compete with China. Thoughts?
No, we're done.
Oh, we're done?
Yeah, dude, that's why I was counting down. We got 5 minutes.
Okay.
And we'll get better at this.
Okay.
Like, I'll have like a clock in the background next time.
Okay.
How's that?
All right. Nice.
Yeah. Well, I should buy something from Amazon. Yeah. See, like Alexa, you can hear me, right? All right. So let's go with the five stories of the day.
Big news last week. The economy contracted by 1.4% on annualized rate. That was a huge bombshell, and a lot of people didn't see it coming. A lot of economists didn't see it coming. I was watching some of the commentators, and they're saying this is just partly due to inventories is the biggest contributor to this one, that being less exports, more imports, but that doesn't still feel good when you hear about it. The economy contracted by 1.4%. What are the ripple effects in the mainland across the economy, and how would it be felt going forward? Nobody has been able to dissect it as well as I would have liked, but that was a shocker news that dropped. Thoughts?
We're a consumption economy, and GDP's like culmination is basically consumption, government spending, yada yada yada. So of course it's gonna drop. Like we're not as consuming as we once were pre-pandemic. So to me that's not shocking, because like the reasons why, like Biden want more government spending, that's obviously gonna want him to prevent a recession, because like with the recession you need what, like 2 straight quarters of GDP like decline.
Yeah.
Like that there's no like if you have a good economic advisor, like you could definitely prevent that, and just by upping up government spending. It's gonna suck in the long term because it's gonna go against inflation, but it is what it is. B, what do you think?
And my thoughts are that what we see from this is not what we see from this report, which is the invoices are waiting for these for them to be completed. So that's not measured in GDP. So I don't have much worry about that because it's a supply issue. So in the short term, there will be issues, but in the long term, there's that need and that want to get these invoices completed. So with the China shutdown coming up, that will escalate that issue in the short term. We'll see issues, but in the long term, they'll come back. I did get this quote from another podcast I listened to this past weekend that it might be chip shortages from Intel. No, Intel mentioned that there's chip shortage, and that's why you see the Intel stock went down a little bit. They mentioned that 2024 would be the recovery time. So that's news that it's not shocking at these days. So
Well, this ties back into our conversation last week as well, where we discussed a lot of supply chain related issues and all of the exports imports related imbalances that occurred has to do with that as well. You want to go next, Adam?
Yeah. So the story that I posted is basically a Market Watch article that basically states here's how Biden could move to cancel student loans. So essentially, in the next couple of weeks, right, he'll aim to forgive less than $50,000 in debt per borrower. So what actually happens is that Biden will wipe out student loans through executive action to the sweep of the pen. Essentially, it's just more like a broad forgiveness that would survive in more legal environment because technically it's a federal loan. So it's limiting the forgiveness to borrowers who owe $10,000 or less. So that keeps the price tag at $75 billion, but will completely eliminate federal student loan debt for a third of all borrowers or more than 15 million debt. So thoughts?
my thoughts is this a political ploy for the midterm elections? That could be one thought, right? Another thought would be my last thought.
Nice.
Open a bag of worms on that one.
Yeah.
My next thought would be, what would this actually help? This is going to help the achievement gap for the people of color. Who does this really help? Who is this really target to? That's a question we can look into. I believe we did mention how that this policy really is gonna not really help the people of color. For this, it's most gonna help people of non-color as they own less amount of loans compared to other ethnicities.
How about you, Mathis?
So I'm not quite sure what was meant in a way. I mean, I understand that, but the whole article, but I'm not quite sure if it means if you have, say, more than 10,000, you still get forgiven for that 10,000 part. That's great if that's the case. And also, it's still means tested. You know what I mean? It's still means tested. There's income requirement to it. And from the current report, it says 125,000 or 150,000 with a cutoff of joint filers being 250 or 300,000, according to Washington Post report. But
Yeah.
if that is a cutoff, I don't think that's too bad, because if you're earning more than that, I'm pretty sure you're already done paying with it and paying down whatever you had anyway.
Yeah.
So
So
overall, it's going to be a huge boost to the economy. I mean, if you expect a recession and you forgive debt for that amount on people who owe that much, there isn't going to be a lot of shock to income when the payments start, and then when the economy contracts, and then there are going to be a lot of layoffs.
Yeah, and typically the people who, so that was from a Washington Post article, what Matthews had just said. Like they're thinking about the income cap. And essentially, like if you're an individual who earns 125 to or 150, you're doing something right. This is like targeting, the teachers who have to get a master's degree, because that's the best way to, lift up their careers. So yeah. Who got the next topic?
I got it. Next
All right.
topic we're going to go through the stock market. Warren Buffett, this past weekend, he ripped the Wall Street for saying that it's becoming a gambling parlor. these days, with everybody speculating. Thoughts about his statement there?
So, Matthews, do you mind if I?
Actually, I missed the first part of that statement.
Wall Street, basically, Warren Buffett's saying that Wall Street's turned to a gambling parlor due to there's stocks like Robinhood that's making things more easy and commission free, which is leading to these kind of tactics.
Absolutely. I mean, go ahead.
So, I feel like should be like a norm for me to introduce a book. It's the 3 best option strategies for beginner. And it's basically from Freeman Publication. And the reasons why I pointed that out is because a lot of people realize that contract options are the easiest go. It's like a lottery, right? Like if you go for the cheapest contract, so like Tesla, you buy a put option for Tesla, and like expecting it to go down, like the very cheapest, like maybe like it goes $100 or whatever. And granted, it's not cheap, like cheap in terms of relative to the actual stock. Like if like stuff happened with the Twitter deal where like he's offloading his shares, that contract just appreciated, and next thing you know, you're basically like you didn't own anything. You just have a future contract that you sold it to another individual. That's chances are it's a broker dealer or a market maker that's basically wanting that. And so now you have a lot of fluctuation within the market, and you're not really looking at the fundamentals. You're just looking at, oh yeah, like these are the events that occur, the news events that affects the stocks. Like, oh, Gates, why did you short my stock? Like stories like that. Maybe he'll elaborate in the next coming weeks, months, and next thing you know, that option contract is favorable. So, Matthews, go ahead.
I am not quite. Well, I definitely agree with Warren Buffett. I mean, that has already happened. Wall Street turning its stock market into a gambling parlor. As technology has, as I said, sophistication technology has increased over time, the length of time for which the stock has been held has been going down and has gone down dramatically into like milliseconds or whatever. And most of the trade is actually being done by high frequency traders anyway. So that I would just say that has been already the case for a number of decades. Well, 2 decades now, over 2 decades now. But it's even more true that it has turned into some sort of gambling rack, because apps like Robinhood and those TD Ameritrade has led a lot of retail investors in, and the retail investors assume that they're getting access to the market, but they're also helping the market makers, as they say, like the I forgot their name, like the Citadel. Those guys, because all they want is they want you to trade, and they make their money on volume. And if you hold longer, they don't make as much money. If you keep trading, they make a whole lot of money. So yeah, he's right. I would say he's right.
And just some learning facts, right? So when we trade in Robinhood or TD Ameritrade or all these discount brokers, essentially we both have a spread, and that spread isn't truly the market price. So like a lot of the consumer traders who wants to make it in the market, you have to realize is that you just not only bet against yourself, but you're basically like extending that gap, right? And also another learning thing, there's a concept called the odd lot theory, and it's a technical analysis based on the assumption that small individual investors is usually wrong, and that individual investors are more likely to generate odd lot sales. So whenever like if the odd lots are like bullish or bearish or whatever, it means that the idea is to act the opposite of those traders. So against the retail tailors.
Let them in and trade against them. Fun.
Yeah.
How that.
And utilize this theory, and that's how they make money. And they would basically like follow like high net worth individual trades and go against the retail investors. And their bar is basically, if you have $100,000 or less, we'll do the trade for you. But if you don't, we're gonna go against. So, like I might be talking out of my ass, just to cover myself, right? but yeah, like it's a thing. So whenever if somebody heard of odd lot theory, think about it. Maybe it's not a good thing if you're a retail investor. So yeah.
Michael, some thoughts on that? Always looking to. Oh, I blanked for 2 seconds. look into the conflict of interest. That's something that you always want to look into. Whoever advice you're getting it from, look at the conflict of interest. If you're listening to on YouTube, identify what they're trying to sell you. If they're trying to sell you something to get some profit. So look at the conflict of interest.
Yeah. And if they don't say they're a fiduciary, they're not a fiduciary. Even though the word has kind of like a douche in it, they're not douche. You should listen to a fiduciary agent, because they're there for your best interest, not for them. So like like nowadays, like a lot of investment advisors, they kind of act more of a fiduciary because they know it's good for business. But like once you say you're a fiduciary, you're legally obligated by that word and a lot of rules. So
yeah.
Who got the next topic? Who got the next topic?
I guess this will bring us back to our hot round table topic we talked about earlier. This is just has to do with interest rates again. They're saying at least.
Did you post the article?
Jerome Powell is saying that the hike in interest rate will be slowing down after June, but no one is still certain yet. And what does that mean for the whole economy going forward? And how does that impact you in your pockets? And I know how that impacts me because of the things I'm after. But it would be interesting, I think. First-time home buyers, I mean, it's going to be screwed for a long time unless you buy now and hopefully refinance for a lower interest rate at a later date. And still that will not be lower enough to COVID rates in some cases if you got a higher interest rate, and that's going to make it a little bit rougher. And that's what I was thinking. That's how I was looking at it. Like, how does that affect me? And if you're employed by a smaller business, there's going to be a lot of liquidity issues and a lot of layoffs, and not a fun time, but it's needed to get the inflation under control. That's understandable, unless you're one of those people, of course. Anyway, thoughts?
And my take on this is that on the short term, we're gonna see some bumps in the road for sure. And the long term, it's part of the process. Once you're in the bullish time of the economy, it all has to go back to the bear. So this is something that was expected, that we see that will be coming. So I think in the short term, we'll get bumps in the road, but in the long term, everything will be fine. Once the COVID pandemic goes away, once the supply chains, figure out themselves, everything comes back to normal. There will be that boost. And as I mentioned in the past of our podcast, week 1 and week 2, this time it's a good time to look into your investments and save up capital.
Yeah.
I'm not a fiduciary person at all. Okay, don't listen to me.
So, so with the Feds, right? I think Powell is doing. He's learning from his predecessor, and that predecessor was, if people recognize tapering, right? Like tapering tantrum, right? That's what a lot of the news outlets use. So tapering is basically, it just refers to a policy that modifies the activities of the central bank, and it aims at interest rates and all that and jazz. So I think what he's doing is he's diminishing the effects of, like, people are a little more conservative in terms of the interest rates, because we all know it has to happen, right? Otherwise we have a high inflation rate. You have a Colombia, Zimbabwe, Turkey issue where it's like, oh well, shit, why is our money worth less? Like, like if that happens, like from the US perspective, export would be a lot better, but in terms of imports, like, because we're very a consumer
Import
economy,
dependent, absolutely.
it's gonna be hard.
Yeah.
So it's gonna help our exports, but it's whatever. But again, like, I think it's just his way to ease people's mind, right? So
Yeah, and we haven't even talked about unwinding the Fed's balance sheet, because there's and nobody's talking about the 9 trillion the Fed is holding in mortgage-backed securities, primarily, and a lot of securities, but primarily in mortgage-backed securities, and what that would mean, especially for those who have that kind of asset. Anyway,
so who got the last topic?
I got the hot topic for the week. Bill Wang, former CFO.
oh yeah, that, can you believe it? That was meme day. I totally forgot about that one.
Oh my god.
So this one,
so much happening.
So this one, in summary, for our listeners. So Bill Wang, he's the CFO for the Archegos Capital Management, and he had a lot of investments through a different kind of way. Not your typical kind of way to have specific kind of ownage of stocks. So he owned a lot of, I believe it was like 30 or some percent that he leveraged, and then at the end of the time he couldn't pay out. So what happens? Sold them, and then that caused an issue for all the banks. And now he's on the hook for it from the SEC, and according to the article, he is now plead non-guilty to U.S. fraud charges. Thoughts?
Thanks. Matthew, may I?
Go ahead.
Alright. So, two things, right? One, good job, SEC, because we need this. And two, if you guys remember, like the book The Big Short, or even the movie, where like a lot of like fraudulent activities is like a precursor to markets essentially being completely
Taking a
not
dive.
irrelevant.
Mhm.
Yeah, like a dive, or like irrational, right? I think there was a book that's on my shelf that's burning for me to read it. And right now, like, these are basically the breadcrumbs of a bad economy, right? A lot of fraudulent activities is showing up, and like, that's why we need the SEC a lot more, is to basically like saying, hey, like, these guys are manipulating the markets, they're screwing people, they're like taking advantage of like people's deposits, like, that's not cool, right? So yeah, I'm glad, like, it's transparent, um and not guilty. No, that's, yeah, like, dude, that's fucked up.
Yeah. I think this has it's not entirely the same, but has some similarities to what happened in 2007, 2008, as a precursor to the total market crash in some aspects. Lehman Brothers, extreme over leveraging that they did, and then they took a dive, and then a lot of people went down with them, and then a lot of a lot of the fraudulent activities or the frauds who were involved in the securities business got exposed. The famous one being, what's his name? I totally forgot.
Madoff.
Yes, the guy. I'm not good with names.
You're
Bernie
fine.
Madoff. So it has some
Yeah.
similarities with that, but not entirely the same. But it's just interesting. And I think this topic, well, not the topic, but the name will be around because there's a lot that has now been discussed at the after effects of Archegos activities. We're gonna find out more in the coming weeks and days. Yeah.
And
Don't-
like the sorry, may I?
Go ahead. Go ahead.
So something just occurred
Hot
to me, and
topic. I'm telling you. Hot topic.
it's like if everybody like know about the billion-dollar boys club or something like that, right?
Yeah. No.
Like there's a concept that basically says, like the SEC can't touch me because there's no law against it. So now they basically ask me to write the laws, but I just basically cause fraudulence to the whole entire economy. Like I generally hope that like this guy doesn't do that, right? Because that's just not a good precedent.
Oh, there's a hubris there. He will definitely do it. But I'm not saying I'm hoping the same thing that you're hoping for, but I think there's enough hubris if you've got it like taken that amount of risk, thinking you can
Get away with it.
get away with it, that you can definitely say stuff like that. What I was gonna say is a lot of the financing that apparently he was receiving, I read it earlier, I think it's Wall Street Journal. It was just, we'll take his word for it, like no auditing, take his word for it, a kind of approach, which was fascinating.
When
And-
you you think about it, if you think about it, if you get his words for it, right? That particular point, that particular detail, he knows people that knows people. They trust those people, and he'll get through with them. This is like that Netflix series Anna. She knew people of people, and then she got her $25 million contract that she almost succeeded in getting for her project, right? But that was entirely a scam as well. So
Yeah.
when you know people and then they trust those people, it'll be a cinch for them.
And
So
also,
wait,
you can't
gents,
question the guy who has a 1.5 trillion and under like asset under management. So I'm not saying you can't, I'm just saying if you're an average banker,
Leverage
or-
that.
Yeah, so go
so
ahead.
being cognizant of the time, I'm guessing this is going to be a hot topic of today, right?
Yeah.
I guess this week. And is everyone cool with that? Yeah.
Yeah.
Yeah. Okay.
Hot
And
topic.
in that article, that apparently, like if you read through it, there was in 2012, he pleaded guilty in inside trading case involving 2 Chinese bank stocks. At the time, he was running an Asia-focused hedge fund, Tiger Asia Management. So, and last May, ARK Invest CEO Kathy Wood disclosed that Wang himself had provided the seed funding for her first 4 ETF.
Wow.
What does that even mean? How do you
Huh?
unpuzzle that? What does that even mean?
It like I don't know if folks are they know about ARK and like and a lot of it is just like
Is it illegal
constant
to
leverage. What's up?
Okay, yeah.
ARK is a investment company that's led by Kathy Wood. She had a good year last year. She had a bet on Tesla, and then it gained her, I believe it was like almost 100% gain last year. So she's very well known from that. But then ever since 2021, her company's stock went down really hard. Went down by like 50%.
It's mostly because inflation hits
Mhm.
worse with growth stocks, right?
Mhm.
And like institutional stocks like banks do really ton well in an inflation environment.
Yeah, so I think we're gonna find out more as the after effects of the unwinding of 1.5 trillion under asset management, going from that to 35 billion the next morning. So we don't even know what the ripple effects of that would do to the markets.
You know what's interesting?
Yeah.
Does it
Hmm.
intrigue you the psyche of Bill Wang? Like he got 1 billion, his first billion. Now he has to go for 160 billion. Like, how does he, what drives him to go that much?
I think someone said there's no end to up. I don't know who said that, but there's no end to up. So
It's
you can always go for more.
it's the notion of the fact that when he did get charged for illegal trading,
Yeah.
he had to pay 44 million. So if you made $1 billion, that's basically pennies. Like that, I honestly wish for a lot of the in bigger investors, they would have a higher kind of like consequences to like illegal actions, like them paying 44 millions for illegal trading. That's I
That's
just
a
don't think
slap
it's
on the
cool.
wrist. Come on.
Yeah.
Yeah. It's like 44 million. And if they made, I don't know, 20 billion, 30 billion, that's nothing. Unless you take a significant chunk of that in cash away from them, it just means nothing. There's enough left to they can make that like in a day or less.
Yeah. So last thoughts. Who wants to go first?
Go ahead, B.
Here.
You know, one thing I like a lot. I love this podcast. You know why I like this podcast? Matthews, you are the man. You know, Prince, Ethiopian, Prince, right there.
I'll take the title.
My last thought this week. I know a lot of things has really moved and kind of slowed down on the news cycle. I don't know. It's good for everybody to kind of take a step back and kind of like just reflect on. There will be brighter winds in the future. So keep sailing. Don't be afraid, and stick to it, and then we'll get there. All this together.
Yeah. I don't recall the exact number that the stocks dropped by last Friday, but it had a significant drop. And if it can drop any further, I think it's worth taking a little bit of risk and putting it in when it is lower. I don't know if this is the lowest gonna get, but
It's rough. Yeah.
the trough, yeah. Excuse me. If you can know when it's approaching the trough and then put in some money, you're gonna make a lot more on the way up, but it will take a long time, and you gotta be patient.
And definitely so I kind of got inspired by your last thought there, Matthews. The best way to do that is go with fundamental analysis, because like real asset values and the value that's in the market, it's always irrational, right? So that's one way you can hedge against stuff like that. But my actual last thought, sorry, is that market works when people play fair, and the stock market's not there for your get rich quick scheme, right? And it's for capital preservation
Absolutely
and
not.
appreciation over time.
Mhm.
And the best way to get rich, start a business, create something, shake the market legally. That's I
Are
guess
you saying shake the trees? Are you saying shake the trees?
Shake the tree trunk, not the roots. All right, don't go underground. Stay above.
All right.
Yeah, that's our last thoughts. If you guys want to
create value.
subscribe here or there.
There.
Subscribe to us. Bam.
All
We're
right.
gonna get it.
Wherever.
Thanks, everybody. Have a good night.
All right, man. See you guys.
Okay.